Here we go. Super gap up. DXCM, one of our major leadership stocks, but we make the high. And guess what? We put that high in at 389. The low was 373. How to trade bull market gaps. Gap open up, get that, snap that entry, bought the 370 calls. That's what our other market maker team was doing, and then getting out at the highs. This is a different type of stock, and the way that the ranges are in trade with bull market gaps on DXCM, which has nothing but strong buy ratings on it. 4.63 average across the board, 19 analysts on the stock. And what matters here, though, is the actual price movement and identifying when to sell at the highs, which we did on the options. So when you're buying those options and you're trading a runaway gap opening bell, and then you get up here at the high when the IR was up here at 100, and there's the reversal to support, there's the attempted rally, and this is all within the DXCM bull market gap on its own, separate from markets, and how bull market gaps can shake the buyers out, set up at support, roll up, and then reconsolidate to get ready and relock and load with your option trading. And getting that right option entry at the wholesale prices are the key. And here is the following. One of the things that we can say on the 370 call, $12.50, and then today's high on those call contracts went to 18.15, and that was the 370 calls here. So when we had the gap up, the 370 call options came right into play, and they did. And not only that, then when we made the highs, the 390 put options were at the cheapest price, and buying those for the pullback and coming out here in DXCM before it went higher. Very strong, very good. How to trade, opening bell gap with options trading, and how to let the runaway gap and the algorithms are the diamonds. And then when they reverse, the diamonds will go back down, and then they go back up. And that's how you learn how to do these ranges in the call side and the put side and whatnot. So we can clearly see on the 370 calls, the highs were up there and the lows were 1750. One of the things about the DXCM trade is identifying that momentum, identifying the algorithmic, which is in our trading app, and it does all the work for you, and it does, and the diamonds don't lie. And when the diamonds change, then you know when to get out, and that's what you have to do with DXCM. Create bull market gap, runaway gap, how to trade the 370 calls, exiting at the highs, buying calls again down at the bottom. When it fills at the high, identify the 390 puts and take the gains out of there, and then come out here at the bottoms. And we're setting up nicely. 370 calls off of the runaway gap open up on DXCM.